All right, cool. All right, guys, so I'm going to go over 10 pairs in the market from Aussie dollar down to gold, and we'll see what we can see here in the market. I'm going to briefly go over currency strength and weakness to see what's been happening, and I'll illustrate to you what I'm looking for here. So looking at Aussie dollar USD straight off the bat, we can see currently the behavior of the market is showing signs of Aussie dollar strength. And with that being said, we can potentially identify here a continuation, i.e. a weakness of the dollar and strength of Aussie dollar. So what I will be doing in this instance is I'll be taking a look at, let's say, Aussie dollar JPY. And what I want to see here on Aussie dollar JPY is a true reflection of that Aussie dollar strength by identifying some sort of synchronization in the market to indicate that the market conditions are pushing bullish. Now, one thing that's really important for you guys to understand is that every single strategy, and I don't want to debate it, because unless you really and respectfully say making profits in the market and you're consistent, then it's not something up for debate, if I'm honest with you. But unless you are that, and every single 4H candle is going to be where most strategies stem from. And what I mean by that, let's say now we're trading the 15-minute time frame. For those, let's say, who are trading supply and demand, what you're looking for in this instance is for price to come to an area in the market where price is failing to break structures. And what you're anticipating is that this is an area in the market / round number in the market / area in the market where the behavior is illustrating that price is failing to break. So now you're looking at this as a demand zone in the market to look for buys. So if you took this buy from this level, you'll be screaming your heads off right now, and you'll be saying to yourself, yes, this supply and demand strategy is working absolutely perfect for me. It's the best strategy in the whole wide world. And then, you know, you continue to trade like this from key levels without adding any confluences to your trade. And then what happens is you find inconsistency. So what I like to do as a trader is I don't like to look at anything being a strategy. Rather, I like to understand where the moves are stemming from. Now, let's say you're trading the lower time frames. Majority of your moves are always going to stem from the higher time frames. And for me, one of the best ways to do that is to use the 4H time frame to understand the behavior of the move itself. So in this instance, we can see here on Aussie dollar JPY, because the candle is green, that Aussie dollar is strong. And if we add a confluence to that and we go over to Aussie dollar USD and the candle is green, that is then signifying to us or validating to us that Aussie dollar is strong. What we can do at this stage is we can then use scaling down techniques, let's say like the 15-minute time frame, and then we can start using structure. So what you don't want to do is you don't want to focus on structure from the 4H time frame or the daily time frame or the weekly time frame, because in theory, when you're sitting at your charts, you're only trading for a short period of time. That time being, let's say, a 4-hour duration. So every trade you are going to be taking in that 2 hours, 3 hours, 4 hours you're sitting down is going to be the behavior of a single candle. Okay? This is going to be the behavior of a single candle. So if now you're focusing on the market and you identify this to be a break and retest level on the 4H time frame, then guess what happens? You're going to miss the behavior of the market during the duration that you're sitting down to trade, which is going to be 1 hour, 2 hours, 3 hours, 4 hours. Right. You guys can't hear me, so we need to fix this. Otherwise, it's going to be a waste of session. Right click, microphone, properties. Details. Properties. let me try and figure this out really quickly for you guys, okay?
Channels option to stereo. Below, make sure to set the sample rate to 48 kilohertz and the channels option to stereo. Below, set your mic/auxiliary device to your default device. When all of this is done and your mic volume is still too quiet, then your problem might be related to an outdated audio driver.
No way.
Or to other programs running in the background.
I don't know how to fix this, guys, and I don't want to waste your time talking about this and then we lose insight into what I'm talking about. I do not know how to fix this. Okay, fine. The audio is fine. All right. Cool, fine. So I'll just work with it. If you can't hear me, I do apologize. I'm doing my best to speak as loud as I can in this scenario, okay? So, who keeps saying I can't hear you? All right, cool, fine. So I'm going to ignore the chat, and if you can't hear me, then it is what it is. It weren't meant to be. Fine. So if I'm focusing on my trading session, I come for, let's say, the New York session now. Whatever I'm going to be trading during the session is going to be based on the behavior of this candle. All right. Now, this candle here isn't representative of any trend or structure. It's representative of the behavior of the market at this moment in time. And if we go back over to Aussie dollar JPY, it's indicating to us Aussie dollar strength. If we go to Aussie dollar Swiss franc, we can also see Aussie dollar strength. Now, when I'm identifying this, what I want to then be doing is taking my scaling down techniques to lower time frames to look for early signs of potential opportunities to enter the market. So let's say now I go down to, I don't know, 5-minute time frame. What I'm now able to do when I'm on the 5-minute time frame is I'm able to identify the consistency with the idea that Aussie dollar is strong by looking at the structure from the intraday time frames, which in this case is my 5-minute time frame. So I would see this simply as price trending to the downside, price failing to break structural lows, a consolidation in the market where price failed to break above, your first structural high in the market, a pullback to a key level in the market, and then, as we'll call this, either a double bottom or a retest of previous structure. Once we see this, then we can add the confluences from the higher time frame and then incorporate the patterns afterwards. So in an instance like this, if we identify that Aussie dollar strength, as we've seen across the board with Aussie dollar Swiss franc, and Aussie dollar JPY, then we can have full confidence that the chances of the market continuing to push bearish is much higher than taking the higher time frame structures and working with them and now saying, well, look, this is the retest level in the market from the higher time frame because the 4H time frame is pushing bearish. Now I expect the low high and a continuation. If you do that more often than not, what you're going to be doing constantly during your trading session is you're going to be trading against the current behavior in the market And if the candle is green, that means in theory you're taking a reversal. So what you want to be doing is focusing on the strength of the market from your higher time frame, which is currently Aussie dollar strength bullish. And here we have Aussie dollar strength bullish. Let's just go to Aussie dollar CAD. And then what you want to do is use scaling down techniques to go to your lower time frame and then look for those intraday opportunities based on the behavior that you've taken from your higher time frame. And I'll make this very, very clear, guys, very, very clear. Unless you're a swing trader or somebody who's prepared to hold your trades for an extremely long period of time, then your higher time frame analysis is only going to be as relevant as, I don't know, it's not going to be relevant at all. Okay. Now, what we do in trading is, let's say now, I'll give you an example. Let's say now we are looking to take advantage of these sells. Okay. We see the behavior in the market is bearish. We're looking for a continuation of that bearish move because on the 2nd of August at 2 o'clock in the morning, Aussie dollar was showing signs of weakness. Here, when we go over to Aussie dollar USD, you can see at 2 o'clock in the morning, Aussie dollar was showing signs of weakness. So now we have Aussie dollar weakness in the market. We can be confident that Aussie dollar is going to continue to be weak until we're proven otherwise. And then what we can do with that information is we can use scaling down techniques to now take advantage of the duration that we're going to be in the trade or in the market, which is 4 hours worth of duration. And then once we scale down to our lower time frames, looking for that 6 o'clock open. So wherever that may be, let's say 6 o'clock. So this is a close. This is a 6 o'clock open. Let's use a 5 minute, see if we get a pattern. We don't really get a pattern. Let's see a 1 minute and get a pattern. So we can just illustrate this. Okay, fine. So from the left here, this is your previous behavior to illustrate the Aussie dollar weakness. And let's just say, I don't know, guys, just as an example, you're looking to take a breakout trade. All right. So now we're looking at the market structure. We know Aussie dollar is weak. We've had confluence by looking at the sentiment of the market. And let's say we're a breakout trader. You're looking for this breakout. You get that confirmation of a bearish engulfing candle, and you look to take the trade and place your stop loss above here. Now, the way you take advantage of bigger moves is by not focusing on your higher time frames first. What you want to be focusing on is your behavior, then your structures on intraday. And then what we do with that information is we use then going from higher time frames to scaling down to then scaling back up to then look for our targets. So this is our entry here. Let's see if we can find this on the 4H. This is your entry here. No, let's take the entry lower here on the 1 minute. Fine. Yeah, this is perfect actually. So let's say you're taking your trade here on, I don't know, the fact that price has created or started to create lower lows and lower highs. You might see a little break and retest, and you want to take the trade on the break of this low. Okay. So now you understand from 4H, Aussie dollar is showing signs of weakness. You find the patterns on the intraday, and then what you do is you scale back up to your 4H time frame. If you want to go for bigger targets, you identify areas in the market where you believe price is going to come to, and then you go for those targets in anticipation that during the duration of this candle open, this is where this target is going to reach. And then you scale back up to your 1 minute time frame to then be able to take advantage of moves that look something like this. And talking about it is pretty simple. Actually doing it is very simple. But in terms of how you do it is what makes it difficult. If you scale down to your lower time frames first before understanding the behavior of the higher time frames, you're going to confuse yourself a lot. You're going to take random trades on your intraday time frames and totally disregard your higher time frame bias and sentiment of the market, which unfortunately will find yourself in a lot of trades that will end up pushing in your direction and then going to break even or potentially stopping you out. What happened yesterday, I was on a live session with the 12-week workshop guys, and we were talking about a sell here on Euro JPY. Let me see if that is it there. Yes, here it is. So this is the sell that I placed on the session on the 12-week workshop, right? So I was on the 5-minute time frame. I was trying to illustrate to these guys on the 12-week workshop that trading doesn't have to be that difficult. I was trying to illustrate that if the candle is pushing bearish, anticipate it to close bearish. And if it's pushing bullish, anticipate it to close bullish. So when I was given this example, I actually took another trade, I think a buy on the 1-minute time frame, that one, and then this one ended up winning. But the illustration I was trying to point out is what a lot of traders do is overcomplicate their trading by using patterns, okay? And if you focus on patterns, then what you're constantly looking for is the perfect structure, the perfect candle formations, the perfect indicators to give you that confidence to execute the trade, as opposed to having a belief system that as you can see on the screen, at some point in time today, a candle has to close bullish or bearish. So I illustrated that by saying, well, this is pushing bearish. I like the look of it. I'm going to take the sell. And then what I'm going to do after I have that belief system is I'm going to use scaling up techniques to be able to look for potential targets. So after I placed this trade, I scaled up to the 4H time frame. And the idea was at entry, which was, where was the entry? Let's place a line there. At entry, price will continue to push back bearish in line with the behavior of this market and the sentiment at the time, which was yen strength. It will continue to push to break and make a new low and eventually make a new lower low. So this is where I went for my target. And then as you can see here, I think the trade was a 1.67 R trade. Yeah, 1.97 R trade. And as you can see here, this is exactly what it did. Now I've got the recording anyway. I'm going to share that with you guys on Instagram at some point. But the idea is pretty simple. First and foremost, you understand the sentiment of the market. Again, you scale down to look for the first behavioral signs, which in this instance, I was looking for sells. So the first behavioral sign here was a bearish candle. Enter it with full belief that there will be a continuation of that momentum shift, and then scale back up to the 4H time frame to look for those targets in line with the duration that I'm planning to trade, which would be a 4-hour duration in anticipation for price to come back down to a low. And it's pretty simple when you look at it that way. Now, I also took another trade today on the New York live trading session. And I took that trade on the 1-minute time frame, as you can see here. And this was also pretty simple as well. At the time, we had executed a Euro USD trade, or another mentor in the community took a Euro USD trade. And the idea was to look for continuation buys way over here. Okay. At the time, I wasn't comfortable executing the trade, so I didn't execute. I held off. And what I waited for was for the behavior, so the sentiment of the market, to illustrate that the yen was weakening and pound was strengthening. So once this candle starts to push bearish, and then there's a depletion, which is a big wick rejection, and it closes bullish, what I'm looking for here at 12.15 is a synchronization in the market to illustrate at 12.15, which is this candle here, that the yen is weak. At 12.15, I'm looking for, well, USD didn't show it. New Zealand dollar JPY certainly did. 12.15, that the yen is weak. So now I can build that confidence that there's a very high chance that the market will drive up based on that yen weakness. And then what I did is I scaled down to the 1-minute time frame and look for the break above the previous high to look for these targets. I was intended to go for a 14 pip stop loss and a 14 pip target, but we got a 17 and 17. I closed partials here, went to break even and got break even on the rest of the position. But again, these are just free trades. I did take, no, these are two examples that I personally took I did take one more trade yesterday, again live, but I can't remember what pair it was on. Anyway, I've got the recording and I'll share that with you. But this is something I wanted to share with you because it's really, really important that you understand this, okay? This is my personal opinion. I'm not saying that this is the holy grail of trading, but it has served me well as a trader. And I really do believe if you incorporate this into your trading, it will serve you very well as well. Now, I'm going to go over the markets for you in a second, just to share that with you. Does anybody have any questions on this, first and foremost? Gold is very difficult. I don't personally think there is anything you can use to trade gold with personally. You can use GJ, but it is pretty confusing. I mean, I don't know why any of you will be trading gold unless you're consistent with currencies first. That is my honest opinion. I mean, the way I see currencies is just simply an instrument that I can use the process of what I do to trade to identify potential trading setups, and that is it. Okay, cool. So you base your trading plans more on intuition? No, it's definitely not intuition. I use confluences to look for my trading setups, not patterns though. All right, cool. Let me fly over the markets and see what's happening. So as I said, at the moment, I can see since the Asian session and the London session, Aussie dollar was definitely showing signs of weakness. It's starting to pick up now into the New York session. I'm not convinced that this will maintain its strength based on the previous candle close and currently the wick rejection that we're seeing now and the behavior that we're seeing from the intraday timeframes. But I'm not going to rule it out that it cannot continue pushing bullish. The reason why I say this is because this move from where price stemmed from to where it's ended has created a very, very, very big range. And usually there is a range that the markets will trade between throughout the day. If this is the initial move for the day, then I do believe price could pull back to around 50% before a continuation. So if I'm looking for continuation sells, my opinion is that I want confirmation of that. I'm looking for a break of 69.18 to see the market continue down tomorrow during a high volume period, and preferably the London session or the New York session. And if not, then I would be happy to continue to look for buys based on the behavior of the market back to some of these highs again before looking for a potential lower high continuation of this formation. That would indicate to me then that the USD is weak. So if USD is weak, I'm expecting CAD to be pushing bearish. And as you can see here, I'm seeing CAD pushing bearish. So this makes a lot of sense and adds confidence to Aussie dollar USD. So what I want to do is mark the structural high. This is an area in the market where price is failing to break above. And if I'm looking for continuation sells on this market structure, I think what I'm going to want to be waiting for is for this candle to close first to confirm that this bullish momentum is now shifting back to the downside, that USD is showing signs of weakness. And again, from where the move stemmed from to where the move is, we can expect price to come back to around 50% before then creating structure to continue higher. So that's my views on USD CAD. On Euro Yen, we can see that the market is pretty extended. We've had a lot of bearish movement to the downside. And I mean, this is why it's very important that if you're a reversal trader and you're not finding consistency, you quickly come away from that as fast as you can. Because look here, you have the market telling you that yen is strong, euro is weak, yen is strong, euro is weak, yen is strong, euro is weak, yen is strong, euro is weak. And all you had to do is identify that, enter here, 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 place your stop loss in a safe place and or above the previous candle, and you would have been a trade that was winning, as opposed to constantly looking for those reversal trades and anticipating the market to pull back. So just a good example to continue to highlight what I was mentioning here. We have a level in the market where price is failing to break, as you can see here from an intraday perspective. Once we have this information, if I'm looking for continuation sells, I'm looking for the break of the structural low, and then I'm looking for that continuation tomorrow around the London session. If not, I will be happy to be patient to see if euro is showing strength. So if euro is strong, I should see euro USD pushing bullish, which I do. We already identified that we're identifying USD weakness. So if euro is strong and USD is weak, this is definitely a very good candidate to look for those continuation buys when given the opportunity. And if euro is strong, then I'm anticipating yen to be weak, and I'll be looking for those continuation buys if given the opportunity. With USD CAD, euro yen, and euro JPY, euro USD, sorry, euro JPY and USD CAD, it is much better for you to wait for a candle close to get that confirmation. It doesn't necessarily need to be from the 4H. You can trade it from the intradays, but you would want a little bit more structure to form just to feel a little bit more confident to look for those trades. So euro yen and euro JPY are pretty much the same, so I'm not going to stress about analyzing this one. If I'm anticipating yen weakness, then I should see pound JPY pushing bullish, which we do see pound JPY pushing bullish. So that just adds that confluence to that yen weakness. And again, pretty simple here to look for trading opportunities. You can see the behavior was set from the previous candle. We have confluence of that. Well, no, we don't across the board. So that's pound weakness. We have confluence of that pound strength, sorry, here on the previous candle close and here on this current candle close. So again, what you would want to do in this instance is just use scaling down techniques to identify what happened on the previous candle close, which was this information here. And then however you trade, guys, I really don't know how you trade, but you can use scaling down techniques to look for continuations on new 4H candle opens, which you call a breakout trade, or you can use retest opportunities using scaling down techniques. So looking for retests like this, and then you look for your breakouts on the highs to then take advantage of that yen weakness and that pound strength. Okay, this is nothing special. This is just understanding the connection between my lower time frames, sorry, my higher time frames and lower time frames, and then incorporating those structures of these formations to my lower time frames, and then the strengths and weaknesses. Okay, so with pound JPY, I mean, I would much have preferred to been in this trade already for those buying opportunities. This candle's pushed 66 pips, if not a little bit more. For me to jump in the trade now, I feel like I will be FOMOing. When the new 4H candle opens, you want to be identifying the behavior of the market in anticipation of a continuation of that behavior, and then use scaling down techniques to add those confluences, i.e. the patterns to jump in. I think if you're not in this trade, then you're just not in this trade. So we're seeing USD weakness. We're seeing also yen weakness. My opinion of that would be that USD JPY is moving sideways. But this can also give us more information on what is stronger and weaker to help us pick between the two weakest currencies at this moment in time, which is USD and JPY, to then have a more high probability trading setup, trade in other pairs. I do expect this to be sideways, or I do expect the previous candle to be bearish and the current candles to be bullish, or vice versa. Okay, so there you go. That's the answer, right? I haven't looked at these market conditions, but I do know based on the behavior, look, we've been moving sideways. Okay, I'm not a wizard. It is just simply what happens in the markets every single day, and we just cannot deny that. All right, so we're not going to be worried about USD JPY. Now, if I'm anticipating USD weakness, I should see Swiss franc to the downside. If not, then of course I will start to then identify Swiss franc weakness as well, which means we could take advantage of Aussie dollar Swiss franc buys based on Aussie dollar strength if this is not moving sideways. Okay, so the fact that USD is pushing much stronger against Swiss franc and and USD is weak, then what we could anticipate on Aussie dollar Swiss franc is a very strong move to the upside. Okay, fair enough. We do have a pretty strong move to the upside. Again, another simple trade. The behavior here obviously illustrates that. But again, I think the range of this candle, how it's pushed, if you're not in already, you're going to be waiting for a pullback, retest, double bottom, breakout trade to look for a continuation of this move. Swiss franc, I'm not going to be trading because I know USD is weak. So I'd rather stay away from this. I don't believe this could be a sustainable move as much as I believe Aussie dollar could be a sustainable move based on what I'm seeing in the markets. Anyway, continuing on to New Zealand dollar USD, I'm anticipating New Zealand dollar to be bullish because of USD strength. So I want to see a green candle. And if that's not the case, then again, I would anticipate New Zealand dollar to be weak. Fine. So at the moment, we're having just a little bit of conflict in the market in terms of sustainability. And this is something you've got to really be aware of, guys. If the markets are not sustaining the moves, then you have to understand that today is probably a low volume day and it's probably best you stay at the market. Or the only other reason that that possibly could happen is because the move has already happened for the day. Mark my words, guys. I'm not making this stuff up. If the move for the day has happened, you will not have any sustainability in the markets. Or if there is a lot of low volume in the markets, then obviously that is another reason why you're not going to have sustainability. At the moment, there is no sustainability from what we can see here. So I'm not looking to trade USD JPY, USD Swiss franc, or New Zealand dollar JPY for that reason. And I'll take a look at pound USD to hope that this is bullish and sustaining that bullish move. Okay, so at the moment, it attempted bullish. It looks now like the market's prepared to flip. So let's see what happens. But now if I'm looking to trade pound USD, I want to see on pound JPY a strong wick rejection, or I want to see a bearish candle. And we're not having that. So then this again is illustrating to me some inconsistency in the market. I'm not sure, and I don't want to advise you on these ones, guys. If I was confident, I'll call out trades all day long. If I'm not confident, then I'm not going to call them out. I feel like we've gone from consistency to inconsistency, and I do believe that the move for the day has happened, or there is a lot of lack in volume. And that was illustrated today as well in the live trading session with some of the moves that were taken. They did move, but they didn't sustain. So I'm not sure what to advise you further on these market conditions at this moment in time. I'm not feeling too confident about them. But nonetheless, I know what I need to be doing. Once I leave this, I'm going to fix OBS and try and get this volume working. Unless I was getting super trolled, I need to figure it out and see what's happening. Do we have any questions? And guys, please hit that like button for me. I'd really, 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 really appreciate it. You liking the stream shows me that you appreciate it, and it makes me want to come back. If not, then I just get all hot and bothered and feel like I'm wasting your time. What if on the higher time frame price is smack up against the key level? Can we still step down on a lower time frame to take a trade? Yeah, of course, you can take a trade from anywhere in the market, wherever you feel comfortable to take the trade. You just have to make sure that you are understanding the behavior of the market at the time that you're taking the trade based on currency strength and weakness, and then try to identify those confluences to add to that trade, giving it a high probability of moving in that direction that you anticipate it to go. I'm not scared to take trades into key levels. One thing I will not do is take a reversal. So if I'm looking to take a buy here, then what I'm looking for is for the behavior of the market to illustrate that strong bullish sentiment. So let's say on the 5-minute time frame, I'm seeing a strong bullish sentiment. What I want then is to see that synchronization. So I want to see a 5-minute red candle on Euro USD, which I did previously. So if I'm looking to take buys on, what pair was I just on? If I'm looking to take buys on USD CAD, then I need to see this candle close bearish. Okay, so in the next 2 minutes, unless this candle closes bearish, I'm not going to take a buy on USD CAD, because then I don't have the confluences to support that USD right now is strengthening. Okay. I also want to see on Euro USD this candle close bullish. Oh, bearish. Sorry. Yeah, bearish. And I'd like to see this candle close bearish as well on GU. So in the next 1 minute and 15 seconds, let's see what happens. I will just say this as a disclaimer. Anything that I'm talking about now in this session is not facts. It's of my own opinion. These are not signals. You may or may not make money, and I'm not taking any responsibility for you not trusting your own judgment. Okay? It's that simple. I do need some mods in here, but I'm not bothered. Anybody who's trolling, man, you know, we just have sympathy for them because we just know deep down they're not making money trading, and that's it. We got sympathy for them. We'll say a little prayer for them and hope for the best. That's it. That's it. Any irrelevant comments, I'm just going to skip over. The rest of it, I'll respond to. What do I bench? I don't go gym anymore. All right, cool. So we've got 5 seconds. So let's say I want to take a USD CAD buy. I want to see here on GU that we closed bearish, and on EU we closed bearish, which we did. That will give me the confidence that if price starts to break the structural high, there's a very high chance we'll continue bullish based on the fact that USD is strengthening. Now that I have those added confluences, there's many different ways I can enter this trade. I can enter this trade looking for a retest. I can enter this trade based on a higher low formation. I can look for a breakout close above entry using scaling down techniques, etc., and then enter the trade. Regardless if this is a win or a loss, it doesn't matter. What I've identified in the markets is that USD is showing signs of strength at the time that I plan to enter the trade. And because I have that consistency across the market, then I'm going to enter that trade with confidence. Now, of course, I always want to be entering my trades 90% of the time with a buy stop. And what I'm waiting for is for price to first pull back to create a wick. And then once it's created a wick, I'm looking for that continuation to the upside to show me that, look, the market conditions have attempted to push bearish. We're depleting that bearish move. And now there's a very high chance that we're going to continue pushing bullish once the momentum shifts in my direction. And then once we have that shift, then I can use scaling down or scaling up techniques to look for either breakout entries above, or I can look for retest entries below. It really doesn't matter. But what I've got in the back of my mind is that USD is starting to shift bullish. And if price starts to shift from, let's say, key levels or respects structures and fails to break them, then there's a very high chance that it will continue bullish. And that is how I trade in its simplest form. Okay, this is not a signal, by the way, and this can lose, this can win, this can whatever else, but this is how I think about my trading. Yeah, guys, please hit that like button for me, please. We got 269 likes with pretty decent turnout today. It'll be nice if we can have some likes on the stream. How do you manage your trades when currency strength kicks against you? Do you close them immediately? No, I don't close them immediately. I don't close them immediately. It really depends, man. I don't want to talk about management now. It's a really long topic. Rox, quick question. If you trade 4H 15 minute, can we go off 15 minute strength or just stick with 4H? You can stick with just 4H or you can go off 15 minute only. It just depends what time frame you're scaling down to. Can I suggest you to join 12-week workshop and that is all you need? 12-week workshop is the only thing you need in your life. And I'm usually pretty humble about it, but I can't be humble about it anymore. From the success that I've seen with traders, the mentality change, the outlook, perspective, the confidence, the belief, the 12-week workshop is the best thing that exists ever. because it's not a course. I take you on a journey for 12 weeks with me. The 12-week workshop is not open now, guys, though. The last 12-week workshop for this year is going to be launched in October, I do believe. I need to take a break. Can you explain the liquidity grabs and how to identify them? I don't know nothing about liquidity grabs. I really don't know nothing about liquidity grabs. 100% agree, 12-week workshop is life changer. You'll be ready in October. Best 3 months of my trading life. Thank you. I appreciate the comments, man. If you enter the trade, almost hit TP, amazing, wonderful work. I come to charts, look for direction 1H, such as up, down, or if they're trending, I wait for the breakout and go to my 5-minute, wait for the retest confirmation. Yeah, but you can't always wait for a retest because you can miss the move. You need to understand the anatomy of the formation of that hourly candle so that you can take advantage of the move while it's happening, not after it's happened. Yeah, I'm not gonna lie, I'm pretty happy with the result of what we see in front of us right now. As an example, and for it to win, I'm pretty gassed. Both of them. We could wrap it up right there, actually. That was a great example. Hi, Rox, how important is it to analyze from weekly time frame to beginning? It's not important at all. But if you're a swing trader, then of course, you know, your higher time frames you're going to need for your ranges. But in terms of your daily analysis, if you're an intraday trader, it's so irrelevant. It's so irrelevant. Rox, put your muscles away. People are more focused on what you bench than charts. If I join the one-time membership, will that include the 12? No, it won't. Please, who knows Rox Academy pay? All right, guys, listen. So we just gave you a beautiful example here of how I look for trades. And I'm pretty chuffed that the trade actually moved for both positions. If you go over this video again, I don't want to keep it too long. You'll see how I incorporated what I told you in the beginning in terms of behavior and identifying what is happening right now in the markets to be able to take advantage of these moves here. And as you can see, we've done 2 live examples and we got pretty good results. Go over the video again, take a look, see what you think. I'm really sorry about the audio, guys. I really am sorry about the audio. I will try and get it fixed and see what happens. But other than that, I'm going to wrap up now because I'm getting all pretty hot in my office. And I will be back in a couple of days or so. Do we have any burning questions? Do you have any burning questions that I can answer just very quickly before I wrap up? I love you guys too, man. Hey, hit that like button for me, guys, please. Please, please, please hit that like button for me. If I take 6 trades per day, is it okay to risk only 0.25 on a challenge? You know, my personal opinion is look to take 1 or 2 trades per day. Have confidence in the concept that you're using, that it has a positive expectancy, and risk 0.5 or even 1% per trade. If you have confidence in the concept or strategy that you're using, then you should know deep down in your heart of hearts, it's almost impossible to lose 10 trades in a row, so you can never blow up that account. And if you're on the challenge and you're using a positive risk to reward ratio, then you know it's only a matter of time before that risk to reward ratio balances out your numbers for you. If you use 0.25, you're basically saying, I'm going to give myself as many chances as I possibly can to get it right. Because out of those 6 trades, 1 of them is going to go in my direction. Or you just love trading, so you want to be in the charts trading, which is a bad thing if you haven't got to the stage yet where you have anything tangible to show for your efforts. So you're always going to sink back into old habits. So personally, no, I don't think 6 trades at 0.25 is a good idea. I think be confident, trade 0.5 or 1% per trade, and look to take 1 or 2 high probability trading setups a day and just rely on your risk to reward to balance it out for you, or have good faith and belief in yourself that you're not going to do any dumb shit. That's it. As a trader, you don't want a fallback. If you have a fallback, then that gives you room to do things that you know you shouldn't be doing because you have a kickback. Like, oh, I've just taken 2 losses. They were both crap trades. You know what? I've got 4 more trades left. Let me trade properly. Like, you just don't want to be in that position. So that's what I think about it. Okay. There's lots of questions coming through now. Wow. Okay. I do trade my plan. Just wanted Rock's opinion. Yeah. Anybody who's putting questions in the chat that are directed at me and somebody else is answering them for you, unless they're really stupid questions, just ignore it. Okay. And I'll try to answer it as quick as if I can and if I see it. I'll shake your hand too, Michael. If I trade GJ, what other pairs or 2 pairs can I use for confluence? £1 pair, 1 yen pair. When trading 1 or 5 minute, do we use 1 hour or 15 minute? If I was you, I would use 15 minute and 1 minute. And if I was trading 5 minute, I'll use 1 hour. What should be the lot size if I have a $100 account? 0.01. If you got a $100 account, it means right now you're in the learning phase, and I would just focus on executing trades and getting experience. I appreciate you, Yash. Thank you. Rox, do your habits affect your trading life? 100 million%. 100 million%. How you live your life, what comes out of your mouth, your behaviors, your actions, your thoughts, everything about you is going to be a reflection on your trading. Mark my damn word. So if you're waking up in the morning like a lazy bastard and you're not making your bed, you ain't going to succeed as a trader. Mark my word. If you're driving down a road and beeping your horn constantly because you get angry all the time, you ain't going to succeed as a trader. If you can't get out of bed to your alarm the minute you wake up because you're tired and you snooze it, you ain't going to succeed as a trader. Everything you do in life is going to be a reflection on your charts, because trading is 90% how you think, how you feel, and how you act. And if you can't control your habits and your behaviors and build on your characteristics and attributes outside of the charts, then you're coming back in to take your frustration out and act the exact same person you are as then. Any tips for trading? Only gold? No, I have no tips for gold. It's not that easy to talk about it, but it's not that complicated either, but I'd rather not go into that. For entry confirmation, what things do we need to look? Is it just looking at candles is enough at levels? Few candles show is going to reverse, but then after a few candles, direction changes. Yes. You're looking for a depletion. You're looking for a depletion, and you're looking for a continuation in the direction you want to take the trade. Can I rely on 15-minute time frame and scale down to the 1 minute? Yes, you can. Williams, if you know how to scale, as long as you know how to read the sentiment of the market and look for that synchronization, like you just saw me here, look for that synchronization in the market to identify that USD strength to be able to highlight these 2 trading opportunities that we just took live here. So as long as you can scale, as long as you can look at the sentiment of the market, understand that, then yes, you can. Does volume matter at all before an entry? Volume is extremely important before you enter a trade. Extremely, extremely important. Being angry is okay. We're all human, but you need to control it. Of course, everything in moderation, Omar. When can we purchase your teaching for USA? I tried last time, it didn't work. No, I've got more Americans in the Roxfix Academy than I do from people in the UK, so there's a problem. You can just email admin if you're planning to join. What lot size do you use? You don't worry about my lot size. In which pair a beginner should trade? Do you use a position size calculator? No, I don't. I just use lot sizes based on the pip range, and I just know that because I execute so much trades. Rox, do Brox, please do stop doing these. I'll do these live streams, but if I need to figure it out, if the sound is bad. When doing top-down analysis after finding your area on your high time frame, you move to your lower time frame. Must you look for a double top or bottom, and where would your target be? So I've just spoken about this throughout the whole stream. I'm not looking for patterns. I'm looking for behaviors in the market. So go back over this stream and watch it and you'll find out. Okay. After, of course, okay, I'm doing 1H in 15 minutes. That's fine. Whatever you're comfortable with. All right, guys, cool. So I don't know how long I've been on the stream, 57 minutes, so that's long enough. I'm gonna listen to the stream back before I publish it live. If the audio is bad, then I'm not gonna publish it because it's just really bad for the channel, and then I'll have to come back and do it again for you guys. If it's decent, then I'll get it posted. All right. But other than that, I appreciate the questions. Thanks for being here. I hope you enjoyed the little lesson and my overview of the market. And of course, these two trades that we illustrated based on what I said. It's a great way to end the stream. And I will catch you guys back here very soon. Take care for now. Bye-bye.